Good afternoon, traders. Chris Buss here with Traders Profit Compass with your Market on Close report for Wednesday, November 18th. Okay, let's get started. Got a lot to go over. We had talked this morning a little bit about we've got the conflicting narratives out there between the positivity of coming vaccines for COVID, counterbalanced with the realities on the ground right now that COVID is getting worse. And this afternoon we got word that New York is going to be closing their school system effective tomorrow based on their positivity results on their testing that has gone beyond 3%, and that was a threshold that they had set for closing the schools. So let's look at the 2-hour chart and then we'll drill down. Notice that on the RSI we had a trend line violation. We didn't get a breakdown right away, but it was hugging below this trend line and then fell away towards the end of the day. Here we had what was potentially a bull cross on PPO momentum, but turned out to be more of a bear kiss, where it looks like you're going to get the cross and then it rolls over right as it reaches the signal line. And you can see that right here, and then it started falling away. And that was during this time here on price where it just could not get over 362. It had spent several hours and hours, all day really, in this narrow trading range, and then finally broke down. Now, we had talked about this morning that there were two levels of interest, 360 and 357. When price came down to this 360 level and broke, I got short there and held on to that short for this down move, and towards the end of the day I rolled that position down to 357 puts for Friday, and I'll tell you why. Normally I wouldn't do an overnight on SPY, but I've got, as you know, we've got a number of long positions on right now. And so this is more or less a hedge, and the fact that it closed below 357 I thought was important, because now we're on the bottom half of this prior trading range, and you know there's a decent chance for follow through tomorrow to bring it down here to 354 or even lower. So to get back on the right side of this trading range, price has to come back up and recapture 357 to avoid the the scenario, the immediate downside scenario of following through down here. Let's look at the 30-minute chart. It may be a little bit easier to see. So as I just discussed, when price came down here and was hovering at the top of this gap and below 360, I got short and then rode that down and rolled the position down to Friday 357 puts, and then we'll see what happens tomorrow. I mean, hedges are a kind of thing, we were talking about it in the trading room. Hedges are a kind of thing you don't want them to work, because of course this is like an insurance policy on your house. It's money you pay, but you never want to have to turn it in, because that means your house just burned down. Kind of the same thing with hedges, in the sense that if these hedges are paying, then you've got long positions that are probably losing. So I have a lot of the longs hedged out with this position, and then tomorrow, if it recovers 357 and goes up, I'll close them and just tactically manage that hedge going forward on, going level to level like we've discussed. So let's move on to the Qs. We pointed out this morning and in days past, this 293 has been a virtual wall. It has spent the better part of 2 days not being able to get through, and finally it let go and came down here to close right at 290, which we also identified this morning as a place where if it broke 290, that would be a place where you'd want to buy some puts, because the next target would be 287 and possibly down here to the gap at 285. Now, I tried a short here at 292, and you can see on the very next bar it came back up to 293 and it stopped me out, and then of course reversed at the end of the day. So that was a bit of a frustrating trade, but I got stopped out and I already had SPY puts that were working, so I didn't go to the trouble to reinitiate those puts, and I figured, okay, I'll just wait till 290, and so that didn't break, so I got nothing on the Qs. And here you can see all this traffic along 293, and then here were the little bars that came up and stopped me out, and then it let go back down to 290. Because if you were watching intraday, when the COVID news hit about New York, what happened was that all of a sudden SPY and IWM got really weak, as you'd expect, and the Qs got strong. We'll get into it in a minute, but I tried a short on Facebook and got stopped out because it looked like it was breaking down. And then when that COVID news hit, it reversed, and all the FANG names saw a sudden burst of relative strength, as that rotation back to growth happened almost immediately. So, make a long story short, we're down here at 290. That will be the key pivot for in the morning. If it can hold 290, there's a chance to move back up to 293. If it breaks, I think we'll find this 288 pretty quickly, and then possibly lower towards this 285 area where we've got an open gap. Here's the one that is most concerning from a technical standpoint. You can see here we broke a level, broke trend line support on RSI. We had this indecisive look here on momentum where it finally turned down. And here on price, we had the trend line, we had the breakout, 177.63. We broke out, and then we came back, and that trend line and that support level failed. And so now that looks like a fake breakout, and we're back in this big trading range. That's kind of a concerning look for our back to normal small cap reflation trade, if you will. So today, when this was happening, I got short IWM 178 puts for Friday, and then as that proceeded at the end of the day, I rolled that down, closed out the 178s and bought 176s. So, now we're on the wrong side of the trend. We lost this support level, and now we're back in the trading range. That's not a real good technical look for someone that's looking to and has a bunch of longs on the back to normal trade. So, but we were ready for that. It's not what we wanted to happen, but we were ready for that. And we talked about putting on hedges at these key levels in case we saw that COVID volatility return, and that's what happened. So hopefully in your intraday trading, you had that little game plan put together and you weren't flustered when you started seeing those red bars and were able to, protect some of your positions towards the end of the day. Looking down at the 30-minute level, just a little more granularity on what happened today. We got up to this, almost touching this 180 level, and really for me was when you can see, hopefully you can see here, this little dashed blue line. That was the open. When we lost the open, that is when I got short, and then it fell away pretty quickly. Didn't give any kind of shakeout, backtrack candles to get you out of the position. It just went down pretty steadily through the end of the day. So now tomorrow, this gap is going to be key at 175.40. Maybe it comes down, finds some support there and goes back up, or comes down to fill the gap down towards 173.50. And certainly, we don't want to see IWM lose 173, because now we'd be down in this area here, and then kind of a whole new ball game at that point. It will have looked like a totally, another total head fake, false breakout kind of look if we get down here losing 173. I mean, we'll have puts in place, and depending on how big you went on size or go on size, that can either be a hedging position or an outright, bearish bet where you're looking to make money on your whole portfolio by having more puts than you have longs, and then so at the end of the day you would make money on that down move depending on the size that you have on your short positions. FANG was really except for Tesla, we'll get into that, but Facebook had done nothing the whole day, just oscillating here, a little bit above, a little bit below the open. We had moved this level down to 273.50 as our support, and on the next to the last candle is where I tried a short, and then it came back up to 275, stopped me out, then of course reversed. So tomorrow 273.50 will be your pivot, and I see an open door down here to 265, 266 if that can't be recovered. So if there's no gap down or anything tomorrow, anything crazy, and it hovers here, just below 273.50, I think that's an objective short with a stop just above, and look for that down move. That would be the technical setup for tomorrow. You can see that here on PPO, it's never gotten above zero. So that's a bearish look. And here on RSI, never got above 50 and has broken below trend support here. So now it's on the it's on the wrong side of the bullish bearish divide here at 50 on RSI. So you've got a triple bearish look. You're bearish on RSI, you're bearish on PPO, and you lost support on price. So now this is looking bearish here as well. So I would expect lower prices there unless that 273.50 can be recovered. Apple, very much the same kind of deal. Did nothing all day. And if you were patient with it and you saw that 120 could not be recovered, that was your objective short. And that, likely that was a frustrating trade. I mean, you sat there and sat there and sat there for hours with it not doing anything. But as long as you weren't stopped out, there was no reason to get out. And then you finally got paid at the end of the day with a quick $2 move down to this 118. So we had identified that level this morning. Tomorrow, that will be your pivot, 118. Really simple. If it stays above, you can be bullish. But if it breaks below, that's your trigger to get short with a stop just above. And I see no reason on a break below 118 that it would not come down and find this 115 rather quickly. You can see that that was a prior low, and I would expect that to come down, if it lost this level, eventually make it down to 115. Now, it has to be said that the FANG names, the growth names, may come back into vogue again if they rotate away from the back to normal reflation trade. This dance, and it's been a frustrating one, has gone back and forth for weeks. You know, they rush out of growth and they jump into value and cyclicals, and then at the first sign of trouble, they reverse it and go back the other way. So there's nothing saying that FANG might garner some relative strength tomorrow if everybody and their brother bails on the cyclical back to normal trade, value trade. And so you might see the FANG names hold up relatively better. That doesn't mean they won't go down. Maybe they don't go down as much as, you know, a small cap name, something like that. So we'll just have to see. But the line couldn't be more clear here at 118 for you to key off of tomorrow. Above, bulls are okay. Below, I think the bears take charge and drive it lower. You can see here also that RSI lost the trend line, is now down below 50, and it looks like PPO is rolling over. And once it goes below 0, then you're back in the bearish regime for momentum. Tesla, man, I hope you got this. I really do. This could, I mean, have made your month. You know, over and above. Just a phenomenal move. And we had talked about this setup this morning. We opened down here at 442.50, and we talked about a break above 450. That was a line that we had forever as being important and as a pivot point. So you got that break above, that was your first buy point. Then we talked about 466, which was a prior high. That could have been a second buy point, and then you just got a phenomenal push all the way up to 495 before it backed off. But I mean, what a move. 45 bucks, and that was after the pullback. So, you know, here it was well over $50. And if you were on that and caught it and were focused on it, kudos to you. That was just an awesome trade. And I mean, that just goes to show you they faded it yesterday, and then they came in here today like gangbusters and just blew the roof off of this thing. I think there were a couple of upgrades for Tesla today. Don't quote me on that, but I think I heard somebody go up to $550, maybe $600. I did see some institutional call buying in the January 650 calls. So they're looking for higher. And I mean, look at the momentum profile, just went, you know, completely vertical here. Yeah, we're overbought, but that can stay overbought for a long time. So tomorrow it'll be a little tougher. I mean, we're in here in no man's land. So just thinking about it out loud, I mean, you'd almost have to get a pullback into 466 or put some fibs on this and see where the 38% level would be. I'll do that by tomorrow. I'll do that. And then we can, you know, maybe get some levels in here where you could take an objective long. But right here you can't. I mean, you're in the middle of no man's land. You gotta get a pullback first. Or if it goes out and takes out the all-time high, if you take out the all-time high, you got to buy. That's the rule. You'll be in blue sky territory. You'll have a well-defined line to shoot against. And everybody who ever bought Tesla that was still in it, you know, that bought the split and all that stuff, everybody will be profitable. There will be no natural sellers above 502.50. So if you get that push tomorrow, that would be certainly a place to anchor a long. Microsoft was, I mean, basically junk all day. You can see here, RSI never made it above 50, so it's been in bear mode the whole time. Same thing with momentum, never broke above the zero line, came up and kissed it, but then has rolled over. So today, on that break of 212.50, you could have gotten short. And so now I think the path is clear for a recheck, a retest of this prior low here at right around 209, and this gap that goes down to 206. So be ready on Microsoft. If you got a kickback to 212, that would be a perfect place to initiate a short if you weren't in it. Probably tough. You know, if it opens here in the middle of the range tomorrow, it's probably going to be a tough, you know, trade to take. You're at the mercy in the middle of the range. I don't like to take those trades, but, you know, if you're sharp on the open and you feel comfortable with that and you see a break lower, I mean, that's up to you. You can take that. I just like to shoot against objective levels, you know, here or here. And then I have a, you know, I have a clear line in the sand. I'm not that good at, you know, trading that opening range like some of you are. So just do what you feel comfortable in doing. Amazon really didn't do anything all day. It came and settled into this 3100 level that we've marked. And as you can see here, all the, you know, all the trading that's gone on right around 3100. And so as long as that holds, there's the opportunity for 3150. But if it breaks, we're coming down to 3050. And then, of course, if it breaks below that, then, you know, down to this 2975 level, possibly right here at this 3025. But, I mean, you can see how important that level is at 3100. So that's your pivot for in the morning. Google. I haven't paid much attention to this. You know, there's no real lines to shoot against. It never, you know, it opened lower and never recovered. So if you were shooting against that open, that was fine. You made, you know, 20 bucks on that. So that's a good trade. That's just not my trade. So I will wait until 1720 to see what happens at this level. Now, the real trade to make was here at this rejection at 1795. That was very objective. You could have gotten short there with a stop just above, and you're still in that trade looking for a move back to the bottom of the box, and that's a you know, that's 75 bucks. So that is that would have been a beautiful entry and trade on the short side at the top of the box where it never could get above. stop here, and then really no shakeout candles at all would have, gotten you out of that position. So kudos to you if you're still sitting short in Google. I think you got a really good chance of finding 1720, and then you'll have a decision to make whether to, cover it there or, see if it's going to break down. But that'll definitely be an important level at 1720. Netflix didn't do anything today. It's just been oscillating here for quite a number of days. I think you got to wait for 480 to break, or this 487.50 to break higher. That's just been a tough trade. I'm not saying it can't be done, but that has the all the hallmarks of getting chopped to pieces, trying to make something happen when there really isn't anything happening there. So better to recalibrate, reset some levels where you'd be interested in taking the trade as it moves outside the boundaries of this this narrow trading range. So that's what I think about that. Let's look at our open trades. We haven't done that for a while, and I apologize. I need to get this out to you guys. We're in Joe. I sent out an advisory on that today. We're sitting pretty on that one. It sold off a little bit at the end of the day, but this name is not correlated to COVID or anything else. It's a totally separate deal, and we're out in June of 2021. We're still 180 days from expiration, and I told you these were trading at $4 today, so you can decide how you want to play that. Yeti, we got nailed on these last week when they flipped the switch on that Monday, and so we took a hit on that. It has recovered to a certain degree, but we're still not home yet. So I'm going to wait on that and just see how it plays out. And if it looks like it's going to roll over again, I'm just going to close it and take the loss. Marijuana ETF, really another executional mistake. This thing had spiked, and we should have closed it just right then and there quickly, even though we'd only been in it for a day or so. We had a beautiful opportunity to get probably a triple on that. We're still ahead now. I didn't look at what it did today. We're ahead, but being ahead is not the same as making a killing, and we should have closed that right away. Coffee, doing great. I think we're sitting on at least a double, if not a triple, when I looked at that today. Snap got killed on that on the downdraft last week, but is making a nice recovery. It's back up to 40, I believe. So it's got a ways to go, but it was up nicely today. It was up over 4% at one point today. I think it backed off and closed up 3%. So fingers crossed there. Gold is probably a dead trade. It probably needed to actually close that out already. Going to take a look at that. Once that $100 drop hit, it hasn't done really anything since. It's gone up a little bit, down a little bit, about the same as what it was. So I don't think we've lost any more than what we did, a week and a half ago. But I'm not going to let that sit and, just decay away to nothing. We'll, take our loss and move on. I told you about keys. Had a little bit of gain on that. I did, actually, it reports today after the bell, so I haven't seen what it's done. I'm in a small position on work, 25 puts. I'm underwater on that. VZ hasn't done anything. And then here we get into some of the hit and run trades. I did an overnight swing on Disney, made a little bit on that. Had some intraday trades on IWM and Microsoft, did okay on that. Took a hit on KRE. Thought that was coming down, went the other way, took a 50% hit on that. And then we have our new positions. Westrock, this One Health, Brinker Restaurants, Goodyear Tire, and then here were the hedges that I did today, starting with 360 puts. That worked out well. IWM worked out well. Told you I got stopped out on QQQs, took a paper cut. Took a paper cut on Facebook, and I've got overnight swings going on IWM and SPY. So those are open positions for tomorrow and Friday. I did take just a flyer on Nautilus. When the COVID news hit, Zoom, Peloton, Teladoc, all those names did moonshots. And Nautilus was starting to do the same, stay at home, work out at home kind of trade. It started to run, and I just grabbed one call at $1.75, just a flyer. It backed off at the end of the day, so I don't know what it closed at, but that was just on the fly, no time to go out and make a big trade idea on that. That was just something that I saw. So that's where we stand on our open trades. We've got some long exposure out there that I'm a little concerned about, actually. I think I high ticked Goodyear right before the news came out, so it sold off. But being able to double on the intraday trades here was certainly helpful. And now tomorrow, with protection in place, I'm not totally paranoid about having these longs up here. Worst case, it's a wash. If the whole thing falls apart, we close these, we'll make money here and, possibly add to that position. If it looks like the whole thing is going to, implode, we can make money. Stay flexible, I guess, is the watchword. We do have these dueling narratives, and it's been tough. There has not been a durable trend for more than a week. We've gone back and forth 3 or 4 times over the last month. Is it growth or is it value? Is it cyclicals or is it, whatever? And so we've got to be flexible and be ready to trade in and out of our protection as we go along in order to, protect these positions. And, we'll have to decide pretty quickly on what to do with these up here that we, for all intents and purposes, got trapped in last week on that initial COVID move. So that's where we're at. Little longer recap today, but a lot happened technically, and I want to be ready for tomorrow for really any eventuality. If it looks like things will stabilize, then we can take off our hedges and get back to normal. Like I said, if it all falls apart, we can close longs at our own discretion and lean more towards the short side of things and make money that way. So stay flexible. Don't get locked into cyclicals and value versus growth, because there's no narrative there to latch onto, to be honest, and it's flipping back and forth rapidly, and it may be like that till the end of the year, depending on how bad these COVID cases come, and then how fast vaccine news comes. And the peril there, of course, is you get another vaccine positive headline, and then the green bars shoot up and wipe out your short positions. So a time to be very, very nimble and on top of it, and don't lock into anything in particular. And then of course trade level to level at all times. If you're new here and like what you've heard, please subscribe to the channel. I'd love to have you join the team, and hit the alarm bell, and you'll get notified of all new content that I send out. And if you look over in the show notes, there's convenient links to both the blog site, where you'll find a lot of interesting articles and helpful articles on trade school and trade ideas and trading psychology. I put a lot of time into that stuff, and I think it's vital for traders at all levels to dial in on their trading psychology and work on that all the time. I think that's the true difference between making real inroads in your trading versus kind of just spinning your wheels, making the same mistakes over and over again. There's also a place to register for my contents. That way you'll get an email each and every time I send out new ideas or observations, intraday, after hours, and on the weekends as well. You'll also get a link to our trading room, where we'd love to have you. So thanks for your time. I really appreciate it. I hope you did well today, and that the morning prep gave you good guidance on what to look for today, the key levels, the ideas about hedging. I think those themes played out perfectly today. Not that we wanted them to, but if you've got it on your game plan board that if this happens, if this level breaks, I want to get protection, then it worked out perfectly, and you were well planned for that eventuality, and that's the whole key in preparing for the trading day. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.